Hey guys, hope you're doing well. It is after the close, Wednesday, 28th. I'm going to do an update. I'm going to hit on global macro. This was the first day that honestly, I mean to sound negative or maybe just kind of like a downer as far as markets go, but it's been really slow. October, I haven't probably had one of the worst months I've had in a while. Just nothing was really moving. It's kind of been choppy. Haven't really been able to sink my teeth in anything, and it's just I just found it choppy. A lot of what we've liked on the pairs trade, things weren't just really clicking or working as well as they normally do. But I think this is kind of a big pivot today. I think things changed kind of in a meaningful way, both technically. You're starting to see it as far as the sentiment and kind of the fear and the overall, just whether you're following the news or listening to, I mean, for granted, I mean, for the last 6 months, there's been plenty of fundamental reasons why the market should go down. Everybody knows it. And it's kind of like that stuff doesn't matter until it matters, which sounds stupid, but it's a reflexive statement about meaning as long as the machines are chasing and performance is okay, it kind of exacerbates itself and people have to chase. So we made the low, we started a rally, we broke all these previous highs. I mean, I'm just talking about the NASDAQ here. You can look at Amazon, it's the same story. But what causes a move like this where we literally didn't go down at all, like you had like two down bars within the whole context of this run here to start October. And it's just a lot of performance chasing, it's a lot of technicals. I mean, once you get through these highs, that's kind of a clear chase signal. So a lot of the same machines and individuals that follow a lot of the same patterns are going to all kind of have the same, they're going to come to the same conclusion. So it kind of causes the chase. Now we can see that the RSI was pretty overbought here. So we did a great job of being bullish here. We bought the low on Amazon. This was a good run, and for September, that kind of made the bulk of my alpha, and what the money I made in September was on Amazon. And then up here, it was playing like a small core long, but I was very hesitant. We talked about how this is just, you got to be careful up here. And then we got the pullback, which was tough last week because around this 3,200 strike, I mean, the market didn't really release until Monday. So that was a little disappointing. Plus, we were in the midst of a down daily cycle that was starting to play out into the bottom of that turn. But what I want to highlight from here, guys, is this is the first time that we have been below the pie line and in what we call the southern hemisphere. So that matters. Anytime that happens, you have to pay attention, especially for risk assets. So that's new. When I go to the daily chart, let me clean this up. Go to the daily chart, you're testing the bands. Now, when you test the bands like this, let me go to some more signals. 1 second. When you have, I was anticipating maybe we were going to get a nice swing line to new highs, but regardless of the reasoning, the storytelling, I mean, we're in front of the election. I thought October would be more volatile. We did basically nothing but rally and then stay in these tight ranges until really this week. Which if you guys were trading a lot of these markets 4 years ago or around Brexit, I mean, we were whipping around for 2 months in front of some of these elections. And the market was chasing the polls. They believed the polls. I think maybe this year the market's smarter. People are smarter to realize like there's a lot of biased polling going on. So maybe it doesn't care as much. But anyway, you think about that stuff, it's interesting, whatever. It is what it is. The fact is now we finally broke out vol. So when you look at the VIX, you look at the ranges that we took out here. I mean, we were locked up between 25 and 29.30. We took that out. Vol exploded. This was a pretty good sized candle. Monday, followed by just kind of like a quiet session yesterday, and then bam. So this real money candle, which is what I was going to say, these candles tend to produce follow through. And I don't expect, I mean, this was a real money candle on the up, and then you didn't get follow through. That's trouble on the downside. If we were to get this and not experience follow through, that is actually good for the bulls. but the probability lies in these types of candles produce more follow through. All right. So the probability is that we test the September lows at this point. We're going to test down here is this probability. Now, yeah, can we hold the bands? Sure. Is this a location for the market to hold? Yeah, but typically it doesn't come with on the back of a real money candle down like this. So I want to be net short. We had a lot of stuff that worked today. I'll get to that in a second. Just one more thing I wanted to point out on directionality of these markets. So I was kind of looking to see if we were going to get a swing line down here with this daily cycle, meaning that we were going to finally take out these series of lower highs. And that's a pretty typical swing line, what we call buy setup. And this is just proves the point that sometimes you can front run it and you can try to nibble with the cycle or with the trend looking for that higher low. But really to add to it, you needed the full swing line setup, which is where you take out the prior high, and you never did that. You couldn't get above the 8, and then this is the result, which is today's action. So there's definitely no doubt that October was choppy. I mean, we had a strong rally, started to get weak, probably caught a lot of people off guard here, took out the highs, people chased instead of being long here with the cycle or being quick here on the break above, people chase the second day, and then now they're underwater, so they can handle this pullback. But after a day like today, it just causes more selling from a lot of these weak longs that are long from bad territory, bad prices. That's what I want to say about the market. The VIX is breaking out. If you look at the dollar and the euro, we talked about it's been fairly quiet and was kind of like maybe a 116 to 119 range. Couldn't get back to 119. Failed at the top of the regression. To me, it seems like the dollar moved on the back more of equities, especially Europe breaking down and the COVID story. So we'll see. At some point, though, if you get, I mean, the dollar should trade. The equity market has liked down dollar, but it depends if equities are forcing the narrative. You get equities down, then the Fed is forced to do something. The dollar is going to front run the Fed coming in, so the dollar is probably going to get weaker. But at some point, you might see that reverse again, where we see the dollar gets low enough that stocks like it. But I don't think that's going to happen until you're 116 or below. So that's what I care about there. We were short silver coming in, been short silver for a while. Didn't get paid on it really for weeks and weeks in this chop. Had some puts that expired, unfortunately, last week. A lot of things that we were right on. Like we were right on Amazon, but too early the end of last week. You rallied on Monday. Russell, we've been early for weeks. If you bought puts, I had a lot of puts that expired worthless, which was just, you know, the theta decay was really kind of painful in October. But then you got the rollover finally this week. So it was like we were right on a lot of stuff, but especially from the option standpoint, that's why it's always kind of tricky if you're going to play in the weeklies. You're right to be a seller up here. It's finally breaking, but I mean, we were sideways for 3 weeks, so you kind of had to just sit there with a whole lot of nothing to do. So I care about the Russell, the bands. It's similar to the NASDAQ. When I bring up silver and gold, it has a lot to do with the dollar not being able to get above 119. Euro above 119 is more obviously dollar bearish. And so with the strength in the dollar today, you're obviously going to see metals get hit. And I think that can continue. I mean, silver does have a high correlation to the equity market as far as risk. If you're going to get hard down days, they're going to hit silver before they hit gold, and they can hit both. So hopefully you guys get that. Those that are on the team, we understand that. I like being core short here. I think just like equities can test the September lows, there's no reason silver can't test 22. And then maybe we even go back to pi in the 200 guys, which is 1920 area. That is actually coherent and consistent with the model. When you break the bands, you get the move back to pi, and the 200 doesn't have to be in a straight line. But since this real money candle here on the 21st, 22nd, I think that actually was the footprint and has put the bears in control to take this back to a full pi cycle down around 1920. So that's a good trade idea. That's kind of sums up my view on the metals, the dollar. Obviously, we talked about equities. When I touch on bonds just briefly, I've been bearish on the long end just because we've been in this downtrend. The curve's been steep. If you want to play bonds long in a risk-off environment, I would stick to 10s and 5s. You could buy calls on 30s, but that's, I mean, I've been playing 30s short. So if you really wanted to be involved, maybe you buy ultras intraday and try to catch the rally if we have a big risk-off move. Obviously had a pretty good move today. But net, I mean, I think treasuries will continue to be choppy. The long end has just as good as reasons to go down. The only thing that's going to keep it bid is when stocks really crack. So if stocks really crack, yeah, you can get the long end up another, 5 points. Just depends how you play it. I've been doing a little bit of both. I've been long 10s before, selling 30s against it. I've been short ultras. Again, I'm not even opposed to buying ultras day trade. If I'm short 30s as a core position, you just got to pick your spot. Today, you could have bought them pretty much all day anywhere and made money. So that might be something that'll get interesting. Ultras and the bond market has pretty low volatility lately. And then lastly, commodities. Oil has been sideways. Today, you finally had some risk-off type of break, but this is all slow growth, deflation type of moves. If you're going to get a big risk-off move, you're going to have oil break. And we've been talking about watching that. We've been in a range 36 to 42, triple top, quadruple top. Now you got all these lows down here at 36, 37. If that gives way, guys, that's a very clear sign that we're back in a risk-off type of environment. What does that mean? That means deflation, growth slowing, strong dollar, pretty much everything else, all other assets get whacked. So this can pick up easily on the downside if we start to get through 35, 36. And this risk-off move is starting to materialize, and we'll kind of keep an eye on the dollar too. Hope that helps. Listen, if you guys want to join us, you're new, you've been kind of on the fence, you want to just get involved. There's a lot of people out of work. There's a lot of professions that are hurting. There's a lot of industries that are going away. And this plays into an opportunity to earn a living from home, take control of your finances, take advantage when things get shitty, when the market crashes and most people are on the long side. You can take advantage and be on the short side. We had a great first quarter and look to do the same if all continues to break out and do what it's doing. We typically do better when there's high volatility. So anyway, guys, this is our PropStep, my prop program, my coaching, my mentorship. I do all through the markets intraday. So you have access to me, you can ask questions. If you don't want to ask questions, you just want to sit there and just be amused by me or just want to sit there and follow along my trading, you can. But you can be in here every single day and ask me questions. Why are you doing what you're doing? Jason, what do you think about this? I did this in my trading, and I'll teach you like how to send me your trades. I teach you about journaling your trades, and you learn my model. You get my entire directional course that we forged on the institutional desk. I mean, this is a skill set that you'll have for the rest of your life, but come in, learn it, but then have experience and trade real time with me and ask, like, why did you do that? What did you think about flipping? What made you do that? What are you thinking there? I've done this in the past. I tend to get tripped up here. What do you think? And that's all the coaching process is, getting rid of the bad habits, the wrong actions, and then your consistency will come through. But we partner with these guys, TopStep, and they sent me this 25% off, guys. If you go through for the next 5 days here, if you sign up with them, that means there's a monthly cost to their program. So they've done over $1 million in withdrawals this year. They did 291,000 last month. They've got guys pulling out 40, 20, 30, 40 grand type of days. But to do like $150,000 account with them, you got to get through their combine, which I've done. I'll teach you, you can do it. You get live, you get funded, and this only costs you maybe $350 a month, 25% off, for less than $300. You're in business trading up to 15 contracts, guys. One futures contract is going to cost you 18 grand right now from typical brokers. So why would you put all your capital at risk? Why would you try to trade futures you just can't do it on a small account. You got to use leverage. Any professional trader, they don't trade their PA around. They use the clearinghouse's leverage. They use the broker's leverage. So that's the best way to do this, guys, is to do it at a prop firm. This is one of the best I know that can handle people globally. So I like them. That's what we've been using. But if that interests you, and you can swing trade their programs too. Might have guys that are swing trading futures around, and that's really helpful for taking positions overnight. Maybe you can't trade all day every day, or maybe you want to do both. I recommend doing both. So you come to the membership site here. This is jenkinscm.com, Jenkins Capital Management. You go to memberships. I've got like my flagship Cycle Edge. This is just our real-time alerts. This is kind of our membership, our flagship membership. Everything we're trading, we're in there chatting it up, doing analysis. A lot of real-time alerts. You have access to me pretty much there every day also. And then the same thing on the crypto side. But here's my prop team and my options team. So my options team is where I really lay out specifically what we're doing around core positions, longer term trading and swing trades, even day trading with options. That's all that stuff's here. They give you my options course. And then my prop team is right here. Click this to get access. And guys, I would just encourage you to sign up, take advantage. We'll get you set up through TopStep and 25% off. I mean, you're going to be live trading a huge amount of buying power. It's just a better way to go. Save the money, all right, and put it into yourself. Get our courses, get all my courses here. This is still a trading package I've been doing since COVID. But my options program, my futures, my Forex, my institutional full directional model, it's 9 hours. I teach you about risk, analysis, how we do it. There's 3 pillars: risk management, all our cyclical stuff. And that's just something you'll have for the rest of your life. So whether you want to trade through us or follow me, or 20 years from now, you can do it anywhere in the world. Doesn't matter the asset class. It's just an amazing thing. I want to help you get free. I've been free for almost 15 years now, only directionally pulling money out of the markets, haven't taken a paycheck. You guys can do the same. You just got to put the time in and put the work in, but get the right education, the right skill set. So that's what this is about. And then you also are going to have my time for an entire year for this price. So, and then I'll help you get through the trading combine. You can trade with me, and we can start putting together days like we had today. Like, look at some of this stuff. I mean, here's $6,700. There's the VIX trading on the long side, $3,600. Just short one contract, $5,000 a day. Silver today did 6,800. NASDAQ, if you were short from yesterday, is 14 grand. So just get involved, guys, on one contract you can do a lot, and you can earn a lot in the futures market. But you gotta have a process. You gotta have a model. Don't put it all in your account and risk it. Spend the money to invest in yourself for a fraction of the cost, and then let me help you with a trading firm that can help you get the capital you need, because most traders are undercapitalized. They're not able to take advantage of all these different plays and set up the pairs trades, etc. All right, guys, hope that helps. See some of you in the morning. Have a great evening.